Welcome everybody to the Cash Flow Digest. I am filling in for our fearless leader, Matt Faircloth. My name is Jacob Sandoval. I am the head of investor relations for the DeRosa Group. Matt is some big shoes to fill, so I won't be filling those shoes alone. Luckily, I have a partner in crime today. He is the brains of the DeRosa team. He is the one, the only, Hait Patel.
How are you doing today, Jacob? I heard the weather is really nice in San Francisco.
The weather is nice today, Hait, and you know the sun is always shining in real estate, so we're happy. We're happy over here. Hait and I are going to first talk about a current event, a very interesting current event, especially for me being located in the Bay Area. Hey, so the article that we have to talk about today is titled "Why Some Brokers Think San Francisco's Commercial Real Estate Market May Take Decades to Recover." It is an AOL article. In essence, kind of to summarize the article, and Hait, I'd love to kind of get your take on it. The brokers in San Francisco are saying that, you know, the San Francisco market is going to take a very, very long time to recover. And that is because of a couple of, you know, external factors that happened. That's not specific to San Francisco, but specifically hit San Francisco really hard. One, San Francisco office has incredibly high vacancy rates right now. I think the article was quoting, you know, above 30% vacancy. So San Francisco offices are just empty right now. And that really happened for a variety of different reasons, but the largest reason being the pandemic. People, obviously, remote work became a very, very big and normal thing. And so people worked from home. And then on the back of that is people moved out of San Francisco. San Francisco is probably one of the highest cost of living areas, if not the highest cost of living area in the country. And so people just moved and then they didn't come back. And so San Francisco is having a hard time recovering, getting people back in the office. Whereas, you know, to kind of juxtapose that with the city like New York, a lot of people in New York have been coming back to the office in New York. And I think that has a lot to do with New York being more finance-based and San Francisco being a lot more tech-based. So like the cultures of those kind of two different corporations or corporate cultures are very different. So anyway, brokers think it's going to take decades, you know, of 2042, I think is the article said, Hait, before San Francisco rebounds. What do you think about that, Hait? What do you think about the article?
Yeah, I mean, so the article is very vague. It does not mention, you know, specific numbers as far as what area we're looking in San Francisco. Right. If we're considering San Francisco as a whole, if it should include, that'd be a very large number. If we're just concentrating on the downtown corridor, right? Because from just my understanding, you know, San Francisco, according to when I was looking up on CoStar a few months ago, we have about 150 to 190 million square foot of office space in San Francisco. But it depends on what area. If you're looking at just the downtown corridor, it's a little bit less. So the suburbs are still doing pretty not well, but they're still doing about 10 to 13% vacancy. The downtown is what's taken the core of the hit. You know, that's where the averages are anywhere from 25 to 30%. So it's a mix of both. I mean, there's always opportunities in all markets, but it is true, you know, if you have almost 190, 150 million square foot plus some new construction, about 1 million or 2 million, that's usually coming into the market in San Francisco, it is worrying because who is able to afford those kind of big square footage? You know, if we look back historically when San Francisco was booming, when we had low interest rate environment up until 2020, you know, when we started to take off, the cost to borrow for a venture capitalist firm, for a private equity firm, were so low, they could go into these offices a lot more cheaply. But now that same cost is astronomical. So the article is, I agree with it in the sense that, yeah, it will take quite some time for recovery because we're talking about 1 million square foot is what the article said is needed. You know, to put it into perspective, Diamond Ridge, one of our bigger properties, is around, I want to say 300,000 square foot. So 1 million square foot is quite a bit of tough task to ask to fill up, especially. And the other concern that what drew my eyes was the loans coming due in 2024 and 2025 and how that will impact the overall market, because most of these loans are underwater at the moment. So Right. It'll be interesting to see how that's going to play out, especially.
Yeah.
because most of these companies that were hoping to maybe refi or will cash out are likely looking to do cash injections of some sort, or they'll have to get very creative on the financing component.
Right. So yeah, no, I agree with that. So I mean, I have a little bit of a contrary take here. So while I agree on the basis and the premise that it's going to take a long time for San Francisco to recover, I do think it's going to recover. And the reason why I say that is, I've been living in San Francisco in the Bay Area my entire life, and I just don't see San Francisco fading away in general, right? I think that San Francisco is always going to be a staple of a city. And the reason why I say that is because it is always going to be a technology hub. And the technology sector is only getting stronger. With the boom of AI and all these AI companies, like where are they located? They're going to be located in the San Francisco Bay Area. So I think that the innovation is going to continue to come out of San Francisco. And obviously there are tech hubs popping all over the country, but I think that San Francisco will continue to be a staple. Now, if you believe San Francisco will rebound, let's remove the timeline, and let's say you believe that San Francisco is going to rebound. Then the contrary opinion is that now is actually the time to be buying up San Francisco office, right? Because the Warren Buffett quote, you got to be fearful when others are greedy, and greedy when others are fearful. And there is a lot of fear in the San Francisco office market right now, which means that there's opportunity. Obviously, it will take a very bold, investor to be buying up San Francisco office, but I believe, that is a bet to make if you are bullish on San Francisco long term, which, I think that I am. So, hey, I don't know if you have any other opinions to kind of opine on that, but we can kind of transition otherwise.
Yeah, I mean, to put it into perspective a little bit, OpenAI, one of the biggest AI companies right out there, they leased 480,000 square foot.
Yeah.
So that's one of the bigger companies you're talking about. So when we have a target of hitting 1 million square foot to 2 million square foot a year, it's still a bit tough on that end.
Yeah.
But there will be opportunities when you're looking at maybe a smaller building in San Francisco, or maybe in a better area, or more up and coming area or something. So like you mentioned, there's always going to be opportunities in the area. It's just going to be dependent on where it is and how the location is, and the square footage you have. If you can get below that, or get to that average of 10% vacancy, the properties should potentially cash flow at that point.
Yep.
But at 22 to 30%, it's just very difficult, especially with the high cost of debt that you would have associated with getting into the property as well.
Absolutely. So, ladies and gentlemen, that is the current event of today. Very interesting kind of topic. So, let us know your thoughts in the chat, or, reach out to us. Let us know what your thoughts are on San Francisco office. We'll transition to the